who amplify our work and look forward to learning and growing together. A special greeting to our facilitator, Zekarias Amsalu, whom I'll introduce to you in a bit. We also have Christian Bossam from EcoBank Group, as well as Emma Academy founder, Eloise Berry. Let's just go through a bit of the housekeeping for the call. Our house rules, Our house rules for the session are as follows. There is French interpretation on the line for all our Francophone participants. The sessions are intended to be interactive, and we encourage you to make use of the Q&A box to share questions as the learning proceeds. Please only use the Q&A box and not the chat box so that we know when a question has been answered. If a question needs to be answered on a specific topic, we'll open the mic and have you address your question to Zekarias. We will have a Q&A session at the end of the training where Eric Sepko, our fellow training coordinator, will assist with questions asked in French. Today's session, titled History of Financial Services in Africa, is facilitated by a leader in the fintech industry. He's the founder and MD of Ibex Frontier, Route to Africa market consultancy firm based in Washington, D.C., with a presence and partnerships in Europe and Africa. One of the global top 100 most influential person of African descent under 40 for 2018 under business and entrepreneurship. With his global experience across 3 continents and deeper local expertise in East Africa, Zekarias Amsalu provides premier transaction advisory and route to African market consultancy services. Set for its 8th edition to be hosted in Cape Town this year, Zekarias is a co-founder and co-organizer of the premier Africa Fintech Summit, a biannual summit that takes place in Washington, D.C. and one African city every year. A thought leader providing deeper insights into investable opportunities in Africa, Zekarias has been featured on various international media outlets, including Forbes Africa, CNN, CGTN, Digest Africa, and African News Agency, among others. It's my privilege and honor to introduce to you our friend and partner, Zekarias Amsalu. You have the floor.
Thank you very much, Amy. Very much appreciated, and a very warm welcome to all who joined this first course. We're very much happy and pleased with African Media Agency in EcoBank enabling this opportunity. It's my privilege discussing about the financial services in Africa. Most of the things we discuss is not necessarily new to you. It may even sound primary, but it is very important because we have a call to action as journalists representing Africa, covering African story. We need to correct narratives about the history of financial services in Africa. And also, this is the first course of the next 5. So the course is interrelated. So to understand and also narrate as journalists of the financial development of Africa, we need to also understand the historical context of the African financial services. So it's interactive. We have about 4 quizzes in between, but if you have any question on a particular discussion point we have, please put your questions on the Q&A section of this webinar. Amy will pick it up and bring it to my attention. So I have a presentation to share. I will use the presentation to start our conversation. Bear with me, please. So the title is History of Financial Services in Africa. We're gonna start from the past, current, and we're going to see the future. So the first question we need to ask ourselves is, what is financial services? So financial services is part of financial system that provides different kind of financial products. So we have three facets of financial services. Instruments. By instrument, we mean that something provided to the users in the form of guarantee, promissory notes, checks, bills, a letter of credit. On the other side, we have financial products, mobile money, insurance, community fund, funeral guarantees, credit cards, mobile wallets, mutual fund, they are products. And on the other side, we have services, including leasing, lease and hire, insurance, remittances, finances, hire purchase finances. So when we talk about financial services, we're talking about institution, formal nowadays, and informal from a historical context point of view that provides instruments, financial products, and services. So technically, we're talking about money. Whether you're providing an instrument, you are giving an instrument confirming a value or a transaction amount that will be paid or promised to be paid, or by financial product, you're providing a value in the form of various product that people can use for a particular purpose, or you're just moving financial product, money from one location to another location, or from one user to another user in the form of services. So this will move us to the next question. What is money? As easy and as preliminary as it sounds, we need to understand this part. So Amy will run the first quiz. So you have 4 pictures here. I hope you can see it properly. We have one, which is an old African coin. 2, we have a cow. And 3, you have Corey. Sorry, 3, you have a USD printed money. And number 4, we have Corey. Which of these items would you define as money? Amy, would you like to run the quiz for us? So here is a poll. Okay. We'll give you a few minutes for you to answer the question. So select which of these 4 pictures or a combination of them would you define as money? And we'll give a little bit of time, and Amy will run the poll for us.
Nothing on number 4. Oh, there we go. Okay.
I think we can run the results if we have enough percentage of answers.
There we go.
Can you show us the, okay, good. So we have, who's the winner? So let's see. So about 24% of us said number 1, which is a coin, the gold coin. 1% said, 2% said number 2, which is a cow. 3 is, okay, about 4 of us said the dollar printed money. 24% of us say 1 and 3, that is a gold coin and the printed money. 12% of us called the Corey, and 35% of us said all of them. And I think that is the highest number, and you're correct. All of these are money. Why? Let's define money in the next slide. It's also good to see the historical context of money. If some of you are speaking Swahili, the Swahili equivalent is fedha, that is to say silver. Same with Hebrew is silver. The Latin word for money can be translated as currency. So money is just a measure of value or a medium that can be exchanged for goods and services. So if at a particular culture, time, or location, if people have been using cows to transfer value, to exchange goods and services, that cow is effectively money. And for the last 5,000 years, across the globe, not necessarily Africa, people have been using cattle as money. That is why we say in the previous slide, all these four are money from a historical context point of view. And it's very important to understand this from the African context point of view, because when we talk about financial services, we think about the brick and mortar, or even now digital financial services, institutionalized, licensed, and regulated financial services. And there may be a tendency to rule out, to disregard the traditional money, value, and also financial service providers as if they didn't exist. So we need to understand that. So wherever there is money, whoever is transacting and using that money, the institutions, whether formal or informal, that are actually using and facilitating that exchange of money, be it cattle, be it coin, be it any kind of material that is used as an exchange in a barter arrangement, they are effectively financial service providers. It's very important for us to understand that. For us to understand the financial services context, we need to dig a little bit deep about the use of money from a historical point of view. Barter is a first use of exchange of resources and services for mutual advantage. So before the advent of coins, printed paper money or laser money, and that has been formalized either by empires, rulers, governments, there was barter that Africans and globally being using for value exchange. So for about 5,000 BC, cattle has been used globally and in Africa. And from 1200 BC onwards, cowrie shells have been extensively used as money, as transferring value between buyers and sellers, and also in valuing the amount or value assigned to particular goods. And 1000 BC, metal money and coins started to be produced, especially in the Far East, in China. Bronze and metal has been used, and in 806 CE, paper currency was first printed and appeared in China. So this is the historical context, but as we dig deep into the African narrative, the African financial services and money tradition, you as journalists, I want you to also compare and contrast what we know about the financial services globally and what is happening in Africa, so that if there is a need to correct the narrative about the historical financial services in Africa, then is a call to action for you as journalists. So when it comes to Africa, Africans have managed multiple currencies for thousands of years. They have used a different type of currencies or money as it were in regional exchange between tribes, between people, between nations, and also between the continent and with the rest of the world. The financial services followed the advent and expansion of trade and regional transactions. So as the continent had its own trading routes, financial services started to flourish. And as those trading routes start to diminish, the financial services along that route also diminish. So trade, the African trade history and the financial services are interrelated. So when we talk about money and financial services in Africa, we need to see that from the vantage point of view, the archaeological, ethnography of craft, linguistic, and the linguistic attention of the Africa from its words and numbers. And we need to see that from the historical trade and record keeping of the African continent. We mentioned about the trade route, where there are several historical successful trade empires, trading histories in Africa, but we're just going to select two. One is Timbuktu, or in Mali, in the 1337 CE, and next we're going to see the East African experience as well. So here, the financial services follow the trading capacities and capabilities of the empire. As you see in this picture, the Malian Empire had a huge gold transaction between the continent to the Sahara Desert, and also to Europe as the century turned into 13th, 14th century. So goods were bartered here. So we're talking about financial services. People were selling one good from Mali, say, to the Sahara Desert, or vice versa. So those trading transactions were bartered. By bartered mean people were paying using other commodities. For example, the Malian traders may be selling copper, and they may receive salt or ivory in return. And those people who are assigning value to the amount of salt that need to be exchanged for copper, for example, are effectively providing financial services. So as back as in 1337, there was a financial services flourishing in West Africa because of the trading empire. So there were auction houses. You can think of stock exchange, the Lagos Stock Exchange, London Stock Exchange, Johannesburg Stock Exchange. Effectively, in a primitive way, that was what auction houses were doing back in Mali in the Middle Ages. And there are also commodity traders and valuers that will assign value to commodity. So you can think of the financial services that we can expect from banking services today. And let's go to the East Africa. You've heard about the Aksumite Empire between 300 to 700 AD of this century. The Aksumite Empire is in the modern day Ethiopia, northern part of Ethiopia. They had a long and extensive trading experience between the Middle East within Africa, up in the north to Egypt, to Far East, and also to the Byzantine Romans as well. So they exported gold, ivory, tortoise shells, frankincense, myrrh, emerald, salt, live animals, and in return, they imported textile, iron, steel, weapons, glassware, you name it. And that is also still barter. However, the Aksumite Empire was the first to coin their own or produce their own coin in the first century. So basically, the financial services also flourished, grew to the point actually the Aksumite Empire became the first African nation to have its own coin. So the trading experiences, the trading capabilities of Africa historically had their own expansion of financial services. That is from the empire and from more of a formalized point of view. But if we dig deep from the informal sector point of view, there are other facets of financial services being used in Africa. So we mentioned barter houses, auction houses, loan sharks, it's a typing error there, money exchangers, they are providing financial services. But from an informal point of view, there are also other types of financial services being in use in Africa for centuries. We can see some example. Right now, depending on where you live, most of us are familiar with microfinances. If you live in London or England, you're familiar with housing associations. Here in America, microfinances, community banks. Those microfinances, community banks housing associations actually were informal, tribal, communal associations where people gather together to kind of save money for the rainy day, so to speak, or for a particular purpose, to build a house, to build a community infrastructure. And as the saving of that community grew and formal financial services were introduced, then they grew into microfinances. In Africa, we have similar financial service providers. One example is South Africa, they call it Stockville. So it's basically 100 people who have either family ties, community ties, or tribal connections. They form and they set up a rotating financial saving mechanism. Let's assume they save $100 per month, 100 people, so 100 times 100, you have $10,000. So the first person will be given that 10,000 or 100,000, and he will build his own trade. And he will continue to pay that 100 until everyone in that Stockville rotating informal community gets that saving. In Nigeria, you're familiar with a similar informal financial services called Isusu. Ghana is called Susu. In Ethiopia, they call it Ekub. In Kenya, they call it Chama. So these financial services, though not formal, though not regulated, they have been in use in Africa for centuries. When we talk about financial services, savings, investment, we need to really take into account those historical and informal associations, because they are the future housing associations, as we've seen in England. They are the future microfinance institutions, as we've seen across Africa. They are the future community banks, as we've seen here in America. But with this association comes a very interesting financial mechanism and trust building. Right now, you go to a bank, you build your credit rating. You want to receive a loan, depending where you are, you have a credit rating. So either there's a central bank or credit rating agencies. They kind of assess your credit risk, and they give you a number. Based on that number, the financial institutions give you an amount, and even the interest you pay will be based on that. So technically, they are assigning a trust and a risk factor on you or your organizations. So when you talk about Isusu in Nigeria, Stockville in South Africa, or Chama in Kenya, we say that it is informal, tight community. So the trust is actually based on the conduct of behavior, code of honor, rules. So a person would be paying on a monthly basis without delay, without being reminded. So he's assigned a certain amount of honor. So you go to a community tribal head and you ask about Mr. A or Miss X about their financial well-being, so to speak, or their trustworthiness. And the first thing you hear from them is that, oh, he's been or she's been a member of XYZ Susu or XYZ Stockville, and they are always trusted. They pay on a monthly basis. They don't delay. Even after they got the first award, even after they got their money, they never delayed paying. So that way, they were actually assigning informal credit rating. And that is effectively what the current credit rating agencies are doing. So we need to take into account, we need to recognize those informal credit rating mechanisms as well. One thing we need to also remember is labor pawning. Labor pawning has been in use in Africa. So basically what it means, you have a debt to an organization or even to another family, and they provide labor pawning or providing labor as a form of or as a means of payment in return for debt. It could be a farming community and you have a debt and you commit to provide labor for harvesting during harvesting season for 2 months, and the value is assigned to that service, and you've already paid your debt. So that is also a form of financial services has been in use. So those traditional mechanisms were financial services, and they addressed various needs of the society. It could be budgets, it could be farming need, building and ownership, funeral resources. Some of those Uqub and Susu and Jama, they were used for a community for rainy days. So there is a sudden days or some sort of calamity. Those funds were used to finance the needs of the family or the community. And when we talk about financial services in Africa, we have three periods. So we have the historical pre-colonial periods, and the financial services during the colonial period also had its own characteristics. So we need to study it separately. And we have the period after decolonization to modern day. So pre-colonial period, as we've seen, the Middle Age, and also the early from 4,000, 3,000, 2,000 years ago, Africa had successful trading empires, and financial services were in use. And they have used barter, including cattle, salt, and various materials in exchange for financial transactions. However, there are also other factors that you as specialized journalists need to dig deep and put a correct narrative about the pre-colonial African financial services. Most of us are familiar with the Egyptian history of Joseph. Joseph was effectively a prime minister in Egypt. You heard about 7 years of growth in the 7 years of problems. And it's just, interestingly, the time is 1600 BCE. At the time, people were going to Egypt to buy grain. And biblical account says that actually they were giving money. So they were buying grain using money, both from Egyptian and from Canaan, from the other side of the continent. So there is an Egyptian empire in North Africa, 1600 BCE. So we're talking about 3,600 years ago. They were getting, they have their own money. They were buying, and the account also says that the Egyptian Prime Minister Joseph was putting that money to the government. So there is a central bank mechanism, and it's not only one currency, Egyptian money and money from Canaan. So there are other empires on the other side of the Middle East. It was being collected. And when all the money supply was exhausted, they were selling grain in exchange for livestock. So there was an effective central bank, money exchange, and barter arrangement being used in Africa 3,600 years ago. Something that you can dig deep and then also put the narrative effectively. And here you have kisi pennies, for example, 600 BCE. This iron band was used as currency in West Africa. We mentioned the Aksumite Empire. You've seen the Aksumite coin, gold and silver being in used in 270 CE. So I have one action point for you. So when we talk about modern day banking, you have two different schools of thoughts. There is Babylonians and Assyrian, Indian records showing that actually there was a banking institution used where agrarians and producers and farmers were selling, and there is a promissory note and product used as a payment instrument. However, there is one interesting book by Peter Wickens, and it's called an economic history of Africa from the earliest time to the partition is issued in 1981, and the quote I had is from page 125. It says, the first banking system in the world existed of a head office in Alexandria, that is in Egypt, and branch across Egypt managed by wealthy citizens. These banks received payment on behalf of the state and made disbursement, after which transfers were made to the head office by means of rudimentary bills of exchange, which were non-negotiable. So my question to you, there are written records of Babylonian and Assyrian banking system, which seems to be dating back before Egypt. However, this writer, Peter Wickens, is alluding that actually the first banking system in the world started in Africa, in Egypt. Do you want to do some investigative journalism on this school of thought? There is a call to action to you journalists. Now let's move on to the colonial period. So the colonial period, roughly between 1680 to early 90s. So the colonial powers changed the African financial services ecosystem in a bit. So what they did was they brought their own financial institutions to Africa. They're already formalized and institutional banks to their colonies in Africa. When they did that, they also brought their own currencies. So for example, France in its Francophone colonies brought French banks and the French currency, same with other colonial powers. When they did that, actually, either they destroyed the existing informal, semi-formal financial services we discussed before, the Isusus, the Chomas, which, if they supported, could have been the modern day microfinances. They replaced them with their own institutional services, and they brought their own currencies as well. So these are some of the examples of the currencies that colonial powers used between 1680 and 1919. Post-colonial period, what changes took place? So as more countries became independent, few things took place. So the government that decolonized themselves either nationalized those colonial connected banks, they changed their currencies and they issued their own currencies, or to some extent, they kind of varied the currencies and they kind of personalized to their post-colonial governmental and institutional financial services. We can take one example. For example, the British Empire that was colonizing most of West Africa at the time, they were using West African pound in all their colonies. So post the colonial period, that was changed. For example, if you take Nigeria as an example, Nigeria changed its currency to Nigerian pound to some variation of the old West African pound. And later on, that also replaced by Naira. Same with British Cameroon has its own currency, Sierra Leone, Gambia. So one currency, one financial system being used across the West African, Anglo-African, then post-colonial period, each government had its own central government, started its own currency and its own financial services. So they had several changes after colonization. What does that mean? So post-colonization, we have 54 African countries. You still have 5 regions. Some of them have their own regional currencies. In particular, West Africa is a good example. However, it's brought an issue, a problem. To highlight that, I've quoted Mike Ogbalu, who is the CEO of the Pan-African Payment and Settlement Systems in Egypt. It's an initiative by the African Union, the AfricSim, and also the Intercontinental African Trade Association. So I quote, he said, "The balkanization of the African continent has left such a blessed continent with markets, with 55 siloed markets with 42 different currencies and limited trade with other African members." So post-colonization, you have 55 markets and 42 currencies in place. So technically, you're talking about 55 central banks, several transactions between regions, between countries. And because of those different currencies in use, unfortunately, the central banks and countries to trade between each other, they needed a third-party currency to settle their transaction. Hence why financial services in Africa was, and is currently as well, heavily relied on dollar or euro or to some extent GBP or pound, because each transaction is being settled outside the currency, outside the continent. You can think of this way. You are flying from Lagos to Nairobi, and there is a direct flight. So you can fly from Lagos to Nairobi. Instead of flying direct, actually, you are taking a plane from Lagos to Paris and from Paris to Nairobi. It sounds silly when you have a direct flight to fly that with additional expense and additional time, but the current financial services in Africa is that way. So value is transacted on the third-party guarantee, either dollar or euro or GBP. So that has affected the African financial interaction and intra-Africa trade. But we'll come to this later on. Now I have a quiz for you. Europe had several countries who have their own currencies. 20 years ago, Europe decided to have one currency and they called it euro. There is a movement in North America and LATAM to follow same suit. So if Africa adopts one single currency, what name would you nominate for that currency? I will give you a few minutes to type your answer on maybe on the question and answer. Amy, is that where you want them to answer? Hi, Amy, you here?
So we can use, hi, Zekarias, we can use the chat box for that, just so that we can all see them going in.
Yeah, thank you. So if Africa adopts one single currency, what name would you give to that currency? What's your thought here? Okay, names are coming. So far I see 3 answers. 4.
Let's wait for a few more, or one more minute.
Okay. Remember, this is the direction we are heading towards the intercontinental African trade. and also the advent of the Pan-African payment and settlement that we'll be talking a little bit. So it's good to have a thought and even influence policy if you have any strong opinion about a name for the currency. So this is up to you, journalists, in the coming years to kind of advocate, so to speak, for a Pan-African name you can think of.
Okay, I think that's all the comments that we've got.
Yeah, thank you so much, Amy. So we have Afro, we have Chorus, we have Echo, Afro, Afrique, Africaner, Echo U, African money, okay, Afro. So we have various variations of Afro or Africaner. So for the sake of consensus, can we say maybe Afro is what most of us are thinking? Kind of Afro. Okay. Good. I like the name. So one takeaway you can take from here is that as Africa starts to discuss about its currency, no matter when it is, in a decade, in 100 years, 20 years, we don't know. Then this is something that you can look back and see that you have actually discussed about it. Okay. So now let's talk about the post-colonial period and also most recently. What is Africa known for? What has Africa achieved when it comes to financial services? Look, in 2018, and there is a reason I picked that year, because we wanted to focus pre-COVID, because COVID in some extent has accelerated digital financial services, for which Africa is leading the world. So as if the numbers were astounding and amazing pre-COVID, if we add the post-COVID numbers, I mean, the comparison seems to be out of touch. So that is why I chose 2018. So globally, you have 1.7 billion adults, not only in Africa, globally, 1.7 billion adults who were unbanked, which means they do not have any single bank account or recognized financial services. That's a huge number. And we're talking about adults and they have their own children. So we're talking about more than 50% of the global population at the time. However, 2/3 of those had a mobile phone. So you have 2/3 of 1.7 billion people with mobile phone, but no bank account. And Africa has shown the world that mobile phones can bring financial services to unbanked. That is why Africa has been, is, and continue to lead the world with financial services delivery via mobile phone. All of us are aware of M-Pesa. So people have mobile phones, but not bank accounts. There is no brick and mortar bank in their village, in their rural area, or even opening a bank account is too costly, too inconvenient, or they don't have maybe even the documentation to open a bank account, but they have a mobile phone. The mobile phone providers have their own unique identification way to identify the owners of the phone, the users. They use that identification to bring digital banking services. So what that did was, those Africans who have mobile phone but did not have banking services started to open a bank account digitally. M-Pesa, for example, in Kenya, let's talk actually globally. Globally, only 2% of the global adult population has mobile money. In Africa, the average is 21%. So do you see the leap Africa has? So you don't need to build brick and mortar banks in every village, in every area. It's too costly. It takes age to provide financial services to the mass and bank population. But most of them, if not all, have mobile phones. You can innovate and change the way financial services are delivered and give them the financial services they need: remittances, loans, saving, investment, and peer-to-peer payment to send money from one village to their child who is taking school in another village. They don't need to travel for 2 days to go to a bank and send $100 or 100 shilling, and in this way paying another 50 shilling to pay for transport or transfer fee. They can do it from their phone. And in Kenya, that percentage is 90%, 93%. Right now, actually, it's about 98%. So 98% of Kenyans have mobile money. That is a huge success story that the world has recognized now. And this is something that you as journalists need to narrate it as much as you can, because Africa is leading the globe, showing the way to provide financial inclusion within the context of limitation that A, there are not enough brick and mortar banks in every village, and B, it's costly to do that, and C, you don't need to follow the traditional banking and financial services growth the West has followed. You can innovate and provide financial services using the innovative method that is at hand, that is mobile phones. So where is that financial service provision based on mobile money taking us? And this is a quote I had in 2019. I was interviewed for, I think, November 2018 about the African Fintech growth. And the newspaper quoted what I said. It says, mobile banking is the future on the world's mobile first continent. And that was in 2019. Right now, 70% of all global mobile money industry is based in Africa. If you see here in the picture, Sub-Saharan Africa is leading the world by leaps when it comes to financial services, and is only going to grow because the registered and active mobile users in Africa is astronomically growing. So the future for banks, and hence you see Africa leading banks, including EcoBank, Safaricom that owns M-Pesa, are providing financial services to the mass unbanked population, because mobile money and mobile banking is the future, is also the current trend across Africa, but also more financial services will continue to be provided through mobile banking. So traditionally, mobile banking started by payment from point A to point B, or someone using taxi in Nairobi and paying through mobile money. That was the start of bill payment. However, in the last decade or so, that mobile money and financial service delivery has expanded its reach and content as well. For example, right now, you have remittance being delivered via mobile money. In the past, remittance was from one bank to another bank. And once you receive the money into your bank account, you can transfer that money from your bank account to your mobile money wallet, and then you can start using mobile money. Now, that's not the case. You can transfer money from Europe, America, from your bank account direct to your mobile money wallet, or from wallet to wallet, and cross-border. So you have the Flutterwaves, the Cheaper Cash, the MFS Africa, Tune, EcoBank, globally for using money transfer from wallet to wallet. Easy. And that is actually it's been seen the impact during the COVID-19 pandemic. And as you see in the quote here, digital remittances increased significantly during the COVID-19 pandemic in the last 2 years, as remittances sent and received via mobile money in sub-Saharan Africa increased by 52% year on year, reaching a total of 10 billion in 2020. So when the world shut down itself because of the COVID, when movements were restricted, mobile-based services didn't stop. Actually, it increased by 52%. So because of that infrastructure is already in place, because Africa has already taken a lead in providing financial services to the mass unbanked population that is already familiar with mobile money, people were still able to send wallet to wallet and wallet to bank and vice versa transfers. So that is one success story. However, several bank mobile money providers were also increase their value to the users. So right now you have savings. Most of the mobile money users are either small scale traders or family heads that are doing day-to-day transactions. So saving seems to be out of their reach. However, mobile money service providers have now added a mechanism where you make $10 a day and you just take 1% of it and save it. So because it's kind of customized and provided to them in an attractive way, they were able to build those savings. And the more they save, then they have reward, and then they can start investing. Now you have mobile money investing, including those users who can be a little bit sophisticated, invest in stocks, invest in companies, invest in various financial institutions from their mobile phone. So now with mobile phone, not only that you can transact and transfer value or money digitally, you can save, you can build wealth because you can invest, you can be secured because you can buy insurance. Digital insurance is now formalized. You can manage your tax affairs. You can share costs between peer-to-peer payment. You can also transfer cross-border transactions. And nearly half of 1 billion registered mobile money accounts are in sub-Saharan Africa. So that is why we say the future of financial services is mobile-based services in Africa. Kenya is a good example. 31% of the unbanked population, when we say that did not have formal bank account, then now they use M-Pesa, and 23% of bill payment is now done because as a result of M-Pesa. So what is the future? Mobile money will define and redefine delivery of financial services in Africa. What is the future trend of the African financial services? We mentioned about the current challenge of 55 siloed markets, 5 economic regions, and 42 countries, 42 currencies. The African Union has recognized that. So in January 2022, they have adopted for African Continental Free Trade Areas that came into effect last year. So the African Continental Free Trade Area plans to have intra-Africa trade flourish, and the trade barriers between countries and between borders are removed. That was the idea. However, the issue came, how do you trade between Nigeria and Ghana when you have 2 different currencies and effectively you're using dollar to settle your payment between those 2 countries? How long can Africa be relying on a third-party payment transaction? So in 2019, the African Union recognized that actually you need a central payment settlement, and hence transaction between African countries and traders between 2 countries within Africa don't need to rely on third-party transactions, third-party currency for settlement. effectively, as we've seen the example, they don't need to fly from Lagos to Nairobi via Paris. You can just build the infrastructure, the rail, the financial rail, so that payment made in Naira in Lagos can be received in shilling in Kenya without the need for the continent to rely on third-party currency. That is what is the whole essence about the Pan-African payment and settlement system. It came into effect last year. Right now, about 5 central banks and several commercial banks are part of it. By end of 2023, PAPs expect all the 5 regions and all the central banks to be connected to it by 2024, and all commercial banks in Africa to be connected to it by end of 2025. So what that means, Africa will be saving billions of dollars in exchange and guarantee payment to third-party payments. Traders in Lagos selling products to South Africa, they don't need to worry about dollar crunch or dollar unavailability to transact between the two, because settlement and payment is guaranteed and facilitated by PAPS, the Pan-African Payment and Settlement System. So that is a huge change that we expect in the coming years. In 2 weeks, I will be in Las Vegas for many 2020 fintech conference, and I have the privilege of showcasing actually this Pan-African payment and settlement system. I will be moderating a panel interviewing the Deputy CEO of PAPS and also a central bank governor from West Africa to show how this Pan-African payment and settlement systems is changing Africa's financial services. So something that I'm very much happy to look forward to as well. What other future trends we can expect in Africa? As you've seen, dozens of African central banks have started issuing digital currencies, or CBDC as they call. So more countries are now starting to issue their own e-currency or digital currency. That is not cryptocurrency. Don't confuse it with cryptocurrency. For example, you have Naira, so the CBDC will be e-Naira. Instead of the central bank printing paper money, now you can use the e-Naira to transact. So not only that, it saves on printing money, but given that Africa is now leading the world in mobile money, then you can use the e-currency to transact between entities. So that is going to be recurring quite more. We expect several central banks in Africa will start their own e-currencies or CBDCs. Blockchain-based payment services are already in use in Africa. Africa is right now the largest user of blockchain-based payment and remittances. So by cryptocurrency, we don't necessarily mean these speculative transactions. Right now, remittances are being channeled almost at a fraction of a typical remittance fee that is charged by incumbents. But we also expect those cryptocurrencies used to be like just like the mobile money we mentioned. It was bill money. Now we have saving, investment, wealth building. We expect cryptocurrencies also to expand its reach. That way, right now it's predominantly on peer-to-peer payment and remittances, but we expect that to grow in the coming years. Mobile money is already in use, but what is needed and what is starting to happen is now interoperability. By interoperability, we mean a smooth transfer of value between two different mobile money providers. For example, if you have M-Pesa wallet in the past, to transfer that money to a Vodafone account or another wallet, you still need to use a bank account. They were protectionist, so to speak, right? But right now they're signing an agreement whereby a mobile money transfer between wallets is as simple as it can get. So we expect several mobile money interoperability functionality in the coming years. We expect instant payment and settlements, both at the institutional level because of the PAPS or the Pan-African Payment Settlement instrument and facility, but also at individual basis. Right now, several African Central Bank and Ministry of Finances are piloting or deploying faster payment, or they call it RPP, rapid payment, or instant payment, that will cut the time of financial services being delivered since it started. So we expect instant payment to be the norm. And mobile money and mobile money-based financial products will deepen financial inclusion. So the number of financially excluded or underserved Africans will be fully financially included as a result of mobile money providers. So we expect EcoBank is leading in this way. As an example, you have competition between banks and fintechs. Fintechs are driving mobile money. Banks as incumbents may be threatened, but there are few banks that actually take a collaborative, competitive approach to partner with fintechs and recognize that mobile money and mobile money-based financial services is the future. And hence, as a result, they have partnered with fintechs and have provided financial services to the masses. And we expect those banks who recognize that competitive collaboration or collaborative competition with mobile money providers and ensuring financial services is delivered via mobile money, because most of the African population has mobile money, but not necessarily formal bank account, will be the future winners of the financial services landscape in Africa. In conclusion, what can we say? So Africa is heading towards the intercontinental, interoperable financial services system, where traders can settle transactions in their own currencies without the need for third-party currencies. Quite a few selected central banks and commercial banks are already enjoying this privilege as we speak. By the end of 2023, all central banks, and by 2024, all commercial banks will be connected to that. So transactions and intra-Africa trade will not be held hostage because of a dollar crunch or the need for third-party currencies to settle intra-African trade. Mobile money service and fintech innovators will bring the financially unbanked population to formal economy. When formal economy increase, GDP increase, tax collection increases, governments have the fund to provide all the necessary social services. So the impact of bringing the financially unbanked population to formal economy is huge, and the mobile money service and fintech innovators will drive that success story for the years to come. Africa has already been a showcase for mobile money success story, as we've seen. Africa will continue to be a showcase for multifaceted fintech and financial inclusion success stories for the years to come. So as journalists who deal with covering African stories, call to action for you is your privilege and duty to amplify the success stories Africa has. And where there is a need to correct narratives, to be bold to correct those narratives with a well-researched and defensible journalistic stories. We mentioned about the historical financial services provision. Some of the problem of those narratives is that because other continents, other empires have records kept as a result being amplified. So maybe it's down to us to find those records where they are. When those records are not there, also recognize the African oral history and also take that into account and put the correct narratives. When we talk about the first bank, did it happen in Egypt or in Babylon or in India? It's your duty to put that correct narrative with well-researched journalistic story. The first currency, the first coin, was it in China or the Aksumite Empire in East Africa? It's down to you to put that correct narrative. Why is Africa leading in mobile money? And why is that a success story? What can others, including the West and the emerging market, can learn? Is up to you to put that narrative correctly. So the future, the coming years, will continue to showcase Africa to lead the world in financial service provision, as it has done through mobile money. So I task you and ask you to follow that and amplify those stories. And as we come to the conclusion of our first module, but we'll have a question and answer, I have one more quiz for you. Given the historical context of the African financial service we discussed, and how Africa is leading the world by mobile money, what is your expectation for Africa's financial services by 2025? What do you expect to see? Would you like to put some of your expectation in the chat section and let's see it? Thank you, Amy.
Thanks, Zekarias.
As they putting the answer in the chat section, right?
Should be the chat section. Let me just send a message. No expectations? Okay. Okay, so we can doesn't look like, okay, there's something coming in. Eric, you're gonna have to help me with the French, please. Eric?
Yes, Amy. Well, I wanted to translate. I wanted to translate and share with you the translated question, so you can directly share it with Zekarias.
Go ahead, Eric. I think questions are coming through, not necessarily responses to this question.
So we can go to the next question. So before we touch the question, I have one gift to our journalist here. As Amy mentioned, I'm the co-founder of the African Fintech Summit. The Africa Fintech Summit is a biannual summit that takes place twice a year, once in April in Washington, D.C. on the sideline of the World Bank Spring Meeting, and we go to one African city every November. So far, we've gone to Lagos, Cairo, Addis, and this year, November 3 to 4, we're going to Cape Town. Our summits are virtual. Last year in Cairo, we had 381 in person and 981 virtual attendees. Virtual tickets are selling at $75, but I would be happy to providing each and every one of you here complimentary virtual ticket. Amy will communicate with you. I think she will expect you to complete the next couple of courses, and then she will send you the link. Once you receive the link, you can register. So with the 3-day summit, November 2nd, we have a half-day masterclass for startups and founders. And we have a full-day summit with keynote, workshop, panels. And on the November 4, we select 10 early-stage startups who will be pitching in front of the panel of judges. I think as journalists, it's good if you can listen to how those panel of judges kind of question and ask the founders and how they select the positives and the negatives of the startup, so that you find how to write a story about a particular startup. We'll be happy to give you those complimentary tickets, and Amy will communicate with you as well.
Thank you so much, Zekarias. It's like it's our birthday. We get a present. Thank you. Okay, so I'm gonna, first of all, thank you so much, Zekarias. That was a very in-depth session, and I thought I had questions and then you answered them. So everything just flowed so nicely and it makes so much sense. And it was good to see the evolution starting from the Bible. My mind is blown. So thank you so much for your time and for doing this for us. We really appreciate it. And I know that that everyone online appreciates it too. So we're going to open the Q&A sessions and get going. I just want to see, because Suleiman has his hand up, so I'm going to let him go first. Suleiman, you have the floor.
Yes, thank you very much. Are you hearing me?
Yeah, we can.
Okay. Firstly, I want to say a very big thank you. Your presentation was very, very easy to understand. And I also like the progression you made, from where it started to where it is now. But then I sent 2 questions on the question box. I don't know if you've seen it. If you haven't, then
yeah,
I just want to. Okay, yes. So those are what I want you actually to react to. I mean, like for the second one, in as much as we know, like that mobile, money transfer has created a lot of assist to people, all over Africa, especially us in Sierra Leone. For an example, I'll give you an instance. During the Ebola pandemic, the government of Sierra Leone was using electronics money to pay health workers and other workers who are, working at hard-to-reach areas. But it also comes with tariff, like charges. And those charges, people will see them to be exorbitant. So with those challenges, facing, those electronics or money transactions, what do you think? Do you think pretty soon those challenges will be surmounted and paved an easy way for electronics money to be acceptable? Because even in Sierra Leone, we are having difficulties with acceptability. There are some people, when you want to pay them through electronics money, they will tell you no, they don't even have the facilities, or they will not agree. Because firstly, you, the person that will be sending the money, will pay charges, and those that will be withdrawing that money are also paying charges. So where do you see, electronics money, in the coming years in Sierra Leone? Thank you. But I mean, your presentation was so understanding, and it's really helpful. Thank you.
Okay. Thank you very much, Suleiman. So I will start with your question on mobile money, and then I'll touch the second question, which is about barter systems. Yes, so with mobile money, it's not only mobile money. We've seen that even in mining and other trades. So it goes with the regulatory framework of governments in Africa. So you see certain activity in a particular sector, and you perceive that those traders are making exorbitant income, or they see a huge transaction. So governments may suspect that there is actually, a big pie to be taxed. So some aspect of those responses are regulatory drawbacks. But also remember that the financial services and mobile money is progressing and changing. Regulatory and oversight progress is also moving accordingly. So yes, we've seen exorbitant transaction charges on mobile money, not only by governments, by the way, even network providers. When you talk about remittance, for example, the biggest problem we have, and something that we've been kind of amplifying, is that money transfer between the West and Africa is the highest globally. The United Nations has set 3% as an acceptable cost of remittance. Current money transfer fee to Africa is 12%. It's just unacceptable. However, now these new mobile money providers are coming and providing almost 0% transfer between US and Africa. MFS, Cheaper, Paga, Flutterwaves, they are all doing it. All of a sudden, the same remittance providers, they were charging exorbitant amount to be acceptable, and being in the business, they need to cut their charges, and they are doing it. So similar with mobile money. Yes, governments are charging exorbitant amount. That is a policy issue that is being addressed at least a high level. The PAPS, the Pan-African Payments Settlement System, the Intercontinental African Trade, one of its goal is actually streamlining tariffs and charge across borders. So it takes time, but it's going to change. And those mobile network providers that are charging exorbitant charge, they will be also forced to abandon their exorbitant charge, as those incumbent remittance companies are forced to do because of innovation. So it takes time, it will change. But those sudden mobile money charge that you see is just an issue with oversight and regulatory framework. So what the regulators, they understand, but just let me reiterate. So mobile money is just one form of financial services, and financial services is regulated and controlled by the central bank. So if you have an acceptable financial service cost and charge for financial services, you cannot have a different charge just because it is a mobile money. So that a streamlining will address that, and it will change. I hope I addressed that question. The second is you asked about barter. Right now, with formalization, barter is not taking place. Would you expect that to come back again? Obviously, you have national governments that control financial services within their boundaries, and if they have made that illegal, then it's illegal. You cannot have barter. You need to use an acceptable medium of exchange, that is the national currency. However, with the advent of, for example, new commodities, blockchain-based transactions, for example, values are used, even though it's not barter in a form we know. For example, you have auctions. You provide an auction, airtime is a good example. For example, you are on a holiday in Kenya, and you bought $100 worth of M-Pesa airtime, and you left with $50 unused M-Pesa airtime, and you went back to Lagos. You cannot use it in Lagos, so either you can just throw it, or you go to an airtime auction website and you sell it. I have a 50 minute or 100-minute unused M-Pesa airtime. I'm auctioning it, and in return you get I don't know, 2 Shiba or some sort of cryptocurrency. Would you call that a barter? Effectively, yes. Or you accept a different form of airtime that you can use in Lagos. Is it barter? Yes and no. So the name is changing, but the modern financial service providers are actually facilitating that, but within the context of government oversight and regulation.
Thank you, Zekarias. Our next question comes from Elom Desewu. It reads, what do you anticipate could be the bottlenecks for this common currency?
I'm assuming the common currency means like the, okay. So right now we have 42 currencies. Each government has its use within its boundaries. So remember, we're talking about 55 countries and 5 trading blocks. Even the intercontinental African trade respects and recognizes those national boundaries and national currencies and central bank governments. What it does enforce is harmonization. So, for example, a Kenyan trader selling goods to Lagos cannot be forced to pay exorbitant tariff just because it's trading within Africa, but between two borders. So what this intercontinental African trade is doing is harmonization of systems, avoidance of double taxation and double tariffs, so that Africans can trade within themselves, even though they are living in 55 different currency borders. Even with a much anticipated launch, and after a 7-year debate and harmonization discussion, this inter-African continental free trade agreement came into effect only last year. And even after it came to effect last year, Kenya only managed to do its first export from Kenya to Lagos only last week. Within the context of all those tariffs and unnecessary charges. So if it took Africa 7 years to agree, part of its intercontinental free trade, and it took another year for a trader from one country to another selling, can you imagine how long does it take for now the continent to recognize the need for harmonize the central bank system and move on to central currency system? So first of all, the way I see it is that the regional blocks, the East African economic bloc is one of the strongest and most successful. They're going to have now their own regional currency. You have the West African bloc, we have the South African and the COMESA region. First, those regional blocks, economic blocks, need to have their own harmonized financial instrument in place. And after that, it can grow into continental one. So the challenge is timing. We just need more time. We just need to see this intercontinental Africa trade being tested, tried, and governments, central banks, users, traders should be able to see, yes, it is actually impacting us positively. Now let's take it even further. Why don't we just trade with one currency? And it's gonna take time.
Thank you, Zekarias. We've got three questions from one person. It's Matilda Akakashi. I'm gonna give you all three questions, and if you need a refresher, just let me know.
Okay.
So the first question goes, how can we help people in villages where the use of cell phones is rare, let alone banks, to save money? You ready for the second question?
What was the first question? How can we help them to save, or?
How can we help people in villages where the use of cell phones is rare, let alone banks, to save money?
Okay.
So how can we help them to save money if they don't have smartphones?
Gotcha. Okay, what is the second one?
Do you think that the use of mobile money allows the African population to save money? Question 3. How can the population fight against the digital scam that has grown in the continent?
Thank you very much. So the first question, yes, how can we help the population in the village to save if they don't have access to cell phone? So it goes down to the basic financial inclusion question. So for the continent and the population to be viable, independent, and also productive workforce, they need financial inclusion, they need banking services. However, the brick and mortar banking services is costly, it takes time, and Africa has shown that actually the same financial services can be provided through mobile money. So mobile money has proven itself to be the most effective, cost-efficient, and faster way of providing financial inclusion to the rural population. However, I also understand not everyone has a smartphone, but I want to qualify this narrative that when we talk about mobile money, it does not necessarily mean by those financial services are provided via a smartphone. No, even feature phones are used to provide financial services. I give you one example. You may be aware of Paga, the Nigerian fintech company. They bought their technology company called Apposite, based in Ethiopia. So when a drought hit some part of Ethiopia and Somalia in, I think 7 years ago. So what they did was they came up with a technology where farmers can receive fertilizers and products that need for inputs for their agricultural through their feature phone, and when there is no internet services. That's very important. So not every farmer has a smartphone. They just need to have this old feature phone, and most of the time they don't have internet or services. So what the technology, what enabled it that they still receive their agricultural credits, their phone collect the data offline, and they do their agricultural product. And then when they travel to the city, whether it is every 3 months or so for trading or or buying, then they will be connected to this telephone tower. All of a sudden, their phone will collect all their transactions for the last 3 months. It's already stored. So they haven't lost any financial services, even if they were offline, even if they were using a feature phone. So now the question will be, who will be responsible to provide those mobile phones, whether feature phone or cell phone, to provide financial services? It is a policy matter. So it is the government, financial service providers, telecom providers, to be able to come up with either affordable phones for services, is it through loan, some sort of donation, and providing those phones that will open doors for financial services. But it is a policy matter, and it should be addressed. Second is mobile money. How can we help the population to save money? So in our presentation, we started by discussing mobile money. Initially, it was used just for peer-to-pay payment. However, now new mobile money service providers now provide saving mechanisms. So some of them, they come up with a proposal. You have to propose it to the users who are trading and using that money from hand to mouth, so to speak, not feel the pain of their money disappearing to some sort of saving they don't realize the benefit of. So, for example, you have $100 profit, you need it for your day-to-day life. But if you package it that is a fractional saving methodology, for example, you make 100%, 2% of it is automatically deducted and saved for your bank account. That $2 wouldn't hurt them, but when it is repeated on a daily or on a weekly basis, it builds. So I think the EcoBank is a good example, and you have some digital saving providers. The moment you make some money, there is automation that takes place. Or would you like to save 5% of it? You get X percentage saving or interest. So I think that kind of education, it comes with education, because when a villager is saving $5, is actually taking out of its day-to-day, maybe even hand to mouth kind of use. So you need to educate him that today's sacrifice will bring further wealth management tomorrow. So it comes with education and also rewarding savings. So several banks now are rewarding villagers. If you save X amount of money, then they have some sort of award, encouragement, but it comes with education. How can we help with a lot of scams? Yes, with any technology, the bad side of it is a scam. It is a responsibility of the providers, whether it is the telecom companies providing mobile money or the banks that are providing mobile money, to educate the users to be able to identify the right message coming from the providers. So if you are a villager who are doing mobile money transaction via text, how can you identify a text from your bank or your telecom provider from a false scam? So it requires a lot of education. And secondly, the mobile money providers need to invest a lot on their digital security. Most of the time, scammers get access to their data of the users because of vulnerability in the system. So it's a financial product. It should have the same data protection and consumer protection mechanism like the banks have, because they are controlled and regulated. So the same regulation should take place in the mobile money, but it's down to the providers to have the highest level of security and where possible and where the users are sophisticated enough to use, you need to have a two-way second verification. So before you send a message, you send money, then you should double check with a text, a phone call, or whatever is available in that local community. But it requires a lot of education, joint work between operators, users, and regulators.
Thank you, Zekarias. So we have another question from an anonymous person, and it says, many thanks to Emma Academy EcoBank for this noble and rewarding initiative, and to you, dear speaker, for your brilliant presentation. How can fintech concretely benefit Africa's economic growth in the coming years? And what can we do to be more successful in this area?
Thank you very much. So,
should I read it again?
No, that's fine. Thank you. So by fintech, we're talking about financial technology, where financial services is delivered, accelerated by technological innovation. So when you talk about economic development, we're talking about formal economy. So for example, 85% of African trade is informal and cash-based. What fintech is doing is formalizing that trade and providing financial inclusion to those traders. So trade is accelerated. The more trade is accelerated, you are bringing that informal trade to the GDP, to the country's economy. So basically, you're creating non-existent financial transaction to a formal economy. Just think of a country that is exporting cacao or some agricultural products, and all of a sudden it just struck gold and started exporting gold, which was not in the picture of the globe, the country's GDP. Now it started generating X amount of dollar because of this newfound product. Excluding the foreign currency that is generated from gold, fintech is just like that. It is bringing a non-existent, by non-existent, quote unquote, we're talking about informal trade, to the formal economy. That informal money is coming to the banks, the financial institutions. All of a sudden, the bank institutions have now formal money within their system that they can lend the traders. When money is within the financial institutions, the lending capability of the banks increase. The formal economy that was cash-strapped and cash-hungry now has the capacity to loan. Cost of lending will lower down. All of a sudden, there is a multiplier effect within the economy. The more formal it is, a tax base for the government will increase. When the tax base increases, most likely the tax rate will go down because the government is actually expanding its net, so to speak. The more tax money there is collected, further social services can be provided. So fintech is actually accelerating the economic growth of the country, and the impacts are multifaceted, and it's just huge.
Thanks, Zekarias. I'm going to open a mic now so that we can hear from Noah. Noah, you have the floor. Noah, your mic is open. Noah? Okay, I'm going to open the next mic then. A check. Your mic is open.
Bonsoir à tous. J'espère que vous m'écoutez. Alors moi, ma question était d'abord, je remercie Ama et puis le groupe EcoBank. Et je remercie aussi le panéliste pour cette brillante présentation. J'aimerais dire qu'ici, surtout dans mon pays, je prends le cas du Tchad, il y a ce problème de disponibilité des services de mobile money. Il est un peu difficile pour ceux qui vivent surtout dans les zones un peu reculées, ne serait-ce que d'avoir accès au réseau, même si c'est pour téléphoner. Alors, combien de fois pour faire des transactions? Et au-delà de ça, il y a aussi cet analphabétisme, je dirais, cette ignorance, parce que beaucoup de nos populations ne sont pas allés à l'école et c'est difficile pour eux maintenant de comprendre même l'utilisation de certaines applications qui sont complexes, même pour ceux qui étaient à l'école. Donc, j'aimerais savoir qu'est-ce qu'il faut faire en tant que journaliste, qu'est-ce qui nous attend comme mission pour sensibiliser ces gens-là et leur permettre d'avoir accès à ces services. Et de l'autre côté, comment faut-il faire maintenant pour mettre la pression sur ceux qui développent déjà ces technologies, de prendre en compte aussi ce facteur d'analphabétisme de nos populations? Merci.
I can translate that for our Anglophone speakers. So the question is coming from Chad, and it is related to mobile money and the fact that it is not always readily available for the population. That's the first comment. The second comment is there is a high level of illiteracy in the country, which leads to people not really understanding how mobile money can sort of change their lives. So the question is, what can journalists do to ensure the local population understands the benefit?
Thank you very much, Eloy. That's a very good question. Let me start with the first comment, that is illiteracy about the benefits and even user cases of mobile money. There are enough and good user case examples of mobile money in Africa, in Kenya, Tanzania, and other markets, how it has impacted the economy. So we can use that as a user case to literate or to educate policymakers, mobile money providers, the banks, the central banks. So maybe I will be happy after this call. I will gather some user case examples of those mobile money users across markets, including the one I used about offline fertilizer and agricultural buying mechanism, and how actually it averted famine in Ethiopia because Paga has deployed its technology. And I will share that with Amy, and Amy will share that with you. That is one. As journalists, then it's down to you to digest those case examples, how Kenya has benefited, how did that mobile money help lives with, named and numbered individuals, organizations, not only just on a high level, but how did it help, for example, the students learning on different cities when it comes to remittances? How did it empower healthcare services, whereby now the diaspora living in Europe can pay on a monthly basis for health services for their families back home? And when a tragedy hits and health services is needed for their families can now get the most appropriate health services that they can afford within their countries. Mobile money has empowered it, enabled it. So I think once you have those user cases, then you can use your journalistic profession to educate and provide literacy. That will help. And just for our Francophone journalists in our FinTech Summit in Cape Town, we have a French language session called the growth of FinTech in Francophone Africa. And we're going to have users and policymakers, central bank governors, and also FinTech operators in Francophone Africa that will showcase how FinTech is actually being deployed in the Francophone Africa. So you can also, given that you're getting virtual tickets, and you can use that summit to get an insight into what are the success stories that you can share and educate your own ecosystems. But I will send you some material between today and tomorrow, and Amy will share that so that you can use it to educate your own respective audience.
Thank you, Zekarias, and thank you for sharing information. We got about 8 minutes left on questions, so we are trying to summarize some of the questions as some of them are repetitive. So we just got a few more, and there's one from Stephanie Chifo. I'm so sorry, Shrifo. What actually changes with PAPSS? We still need to address the issue of conversion rates between two currencies. Who does it and how does it work?
All right. What helps change is the settlement mechanisms between two currencies. So far, we need to use a third currency, dollar, and that capability is hindered and at some point even made impossible because the buying country does not have enough dollar in its system to back those buying capability. So what PAPS does is, yes, you still need to convert the Naira with CD, the Ethiopian birr with Kenyan shilling, but you don't need a third-party dollar payment. So PAPS has developed its own payment and settlement mechanism. And the key is this: a guarantee, underline a guarantee to the central banks that they will get that payment in their own currencies without the need to build a national debt with third-party dollar payments. So you are, for example, a trader in Kenya exporting materials to Ghana. So what PAPS does is that those transactions are guaranteed. So you are in Kenya, the buyer is in Ghana, PAPS is guaranteeing the trader and the central bank that you can sell the product and we guarantee the payment. Obviously, there is a exchange mechanism between the Kenyan CD and the Ghanaian CD and the Kenyan shilling, but it doesn't involve dollar. So it will not be hindered. So transaction will take place, you will get your money, but that exchange transaction will take place within PAPS and the interaction between the central bank without the need to rely on dollar. So I think that is very a huge change, and I can only wait for the coming many years to see the impact that will have in intra-trade African transactions.
Thank you, Zekarias. I'm going to open Isaiah's mic, and this is going to be the last question. I'm sorry.
Yeah,
Isaiah, your mic is open.
Yeah, good afternoon.
Yeah,
good afternoon. My question has to do with the issues of people in the remote areas across Africa, where telecom infrastructure is still at and more or less like an at infancy stage. Because as a journalist, my experience have shown that most of the big players, the telcos, and the good number of them that are actually embracing the deployment of mobile banking or more mobile money across the nation, they are shying away from the rural area, and most of those rural areas where light and then development is really not so on the upstage. It does seems that it's creating a challenge for those of them in the rural area.
Yeah.
What do you actually think? How do you actually think this can be addressed? And then what impact it will have on the growth of mobile money across Africa? And then particularly when we're not thinking about having a one currency, how are we going to manage situations like this? That's just my question.
Thank you very much, Azarias. I think this is primarily a policy issue. Without mentioning the country, I was involved in a spectrum sale transaction last year. So a new telecom spectrum was auctioned by a country, and several telecom companies were bidding for it. And quite interestingly, as you quite rightly put it, if you are a commercial mobile money, mobile tower communication provider, a bulk of your money comes from cities with high traffic and a lot of transaction. And you're not a government, you're not supposed to provide infrastructure to the rural area. You just go where there is infrastructure and then make money. But in that auction, the regulator put clauses where when they provide that clause, that auction, that spectrum, they expect the mobile money providers be in rural areas, even by actually putting the kilometers, the distance from nearby city, regional cities, within 2 years. So in 1 year, they should cover 25% of the area. In 3 years, they should cover 35, 75. And in 5 years, they should cover 100% of the village, a village being defined where 100,000 people are living. So those telecom operators are actually buying and given a privilege of running the telecom services with a guarantee that they provide that financial services, financial services and add-on, but telecom services to the rural area. So that question is actually a policy. It is down to the government and the regulator to enforce the telecom providers expand their services. When that telecom services is expanded, add-on mobile money transaction will be affordable and accessible, but it's a policy issue.
Thank you,
Thank you very much.
Zekarias.
Thank you.
Thank you, Isaiah. Thank you so much, Zekarias, for your time and your insights and all the information that you provided and for answering the questions with so much depth. We appreciate you and we're so grateful. And please, please, please come back anytime. Every time.
Thank you so much
and
for
thank you to
organizing
everybody.
this.
It's our pleasure. Thank you. And thank you to everyone who's joined. And we hope you enjoyed it as much as we did. We'll share the recording with you at the end of the session, and we'll share the learning materials with you, as well as the information that Zekarias is still going to share with you. And also our lovely gift that we got from Zekarias to go to attend Africa Fintech Summit virtually in November. Our next session is next week, Wednesday, on the 12th of October, also at 2 p.m. GMT. And we will share those updates with you in the coming days. Thank you so much and have a good evening, afternoon, wherever you are.
Thank you very much. Have a lovely day.
Ellie, just talk. Where she's gone.